into a new mediocre, with the global economy stuck for an extended period in a mediocre level of growth, or arriving at a new momentum, one built on a bolder mix of policies. And these policies are important for government. Clearly, the recovery of advanced economies from the game-changing 2008 financial crisis has been slow, fragile, and uneven. Uncertainties linger over the U.S. Federal Reserve's timing and pace of its exit from quantitative easing. In the Eurozone, it will take time to determine whether the European Central Bank's latest monetary easing will counter the risk of deflation given weak economic momentum. Recent data show that the U.S. economy has been performing better. Indeed, it may be reaching the point where interest rates may start to rise. We are all aware of the potential shocks that could bring, particularly to open and emerging market economies, many of which we find in the Asia-Pacific region. These, of course, are moving more vulnerable to swings in fund flows and substantial adjustments in asset prices. Asia, which accounts for around 1/3 of global GDP, about 60% of global growth since 2008, remains slightly more dynamic. Growth momentum, however, is still being dragged by the modest performance of external trade, given the lackluster global economic recovery. Asia has ample supply of labor and an expanding middle class consumer market with immense growth potential. That said, many of our neighbors are facing a variety of development issues: economic volatility, inflation, capital flight, and currency depreciation, among others. The Hong Kong economy. Hong Kong, one of the world's largest trading economies, is not immune to macro risks. We expect modest growth this year, likely in the range of 2% to 3%. In the first quarter of the year, our economy rose 2.6% year-on-year. That pace, however, slowed slightly to 1.8% in the second quarter due to the growth slowdown of domestic demand and services exports. Our exports of goods improved moderately in recent months. The flexibility of our labor market also helped to keep the unemployment rate at just 3.3%. Nevertheless, the near-term outlook for our economy still depends much on how the global economy will evolve. A positive sign is the steady growth of the mainland China economy. That's reflected in the pickup in export growth and continued notable growth in domestic demand. Further opening up and economic reforms will help unleash growth, providing vigor to the regional economy. While the world economy continues to search for a path beyond mediocre growth, Hong Kong, the world's 8th largest trading economy, stands ready to play its role as an APEC member. Our economic success over the years owes much to our resolute commitment to openness, transparency, and free market values. Hong Kong is also one of the world's major financial centers. That's thanks largely to our combined advantages of one country and two systems, our long-standing business connections, and our professional expertise. Our stock exchange, the second largest in Asia, 6th largest in the world, both in terms of market capitalization, has long attracted initial public offerings. Last year, we ranked second globally in terms of funds raised. Overseas investors account for 46% of trading on our stock exchange. We are the 8th largest banking center, with 70 of the world's 100 top banks operating in Hong Kong. Our asset management industry tops the league table in Asia, with more than $2 trillion under management from Hong Kong at the end of last year. That's up 27% over 2012 totals, and 14 of the top 20 global insurers conduct their business in our city. Our financial services are strong, but we are working to improve them, to make them even more attractive to international investors. Among other things, we are introducing an open-ended fund company regime for public and private funds. We are also setting up an independent insurance regulator. More than the region's international financial center, Hong Kong is also the leading provider of financial services to businesses in the Chinese market. Indeed, Hong Kong has a unique role to play in contributing to our nation's financial reforms, building the necessary financial infrastructure against the background of the mainland's fast-changing financial landscape. Our offshore renminbi business flourishes. Last year, banks in Hong Kong handled trade settlement between mainland China and other economies to the tune of 3.8 trillion renminbi. That's 10 times more than just 3 years ago. The outstanding amount of dim sum bonds stood at some 370 billion renminbi at the end of September, a 21% increase over the end of 2013. And Hong Kong holds the largest pool of renminbi liquidity outside the mainland and handles more than 70% of global renminbi payments. In short, Hong Kong has assumed a critical role in the internationalization of the renminbi, from the promotion of personal banking services to trade settlement and financing, and the marketing of innovative investment products. There is, of course, much still to be done, and we look forward to remaining part of it, strengthening our market infrastructure and financial platforms to meet evolving market needs. Over the past several decades, we've seen a proliferation of regional forums, from APEC and the Pacific Economic Cooperation Council to the Pacific Islands Forum and the Pacific Alliance. For the most part, these forums, notably APEC, promote free and open trade and investment across borders as their primary goal. I think we can all agree that they have helped accelerate regional economic integration. Given APEC's 25th anniversary, I believe this is an opportune time to review APEC's achievements and how they have benefited member economies. APEC's work on trade and investment liberalization has led to reduced trade barriers across the region. It has also enabled more efficient supply chains and greater ease in doing business. The numbers are clear on this. The average tariff in the APEC region fell from 17% in 1989 to 5.7% in 2012. Trade transaction costs dropped 5% from 2002 to 2006, and another 5% by 2010. Between 2009 and 2012, the ease of doing business in the Asia-Pacific region improved by 11.5%. Between 2009 and 2011, supply chain efficiency soared, with trade times reduced by nearly 7% and uncertainty by 4%.